Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Friday morning, last day of the week. And what a week we've been having here in India. 3, 4 and 6% of the Nifty bank and the mid and small cap indices respectively. So fantastic one. We start with slightly mildly negative cues. It's a Friday as well. 2 days of holidays. Headline risk is always there. Will we take a bit of a pause is the question. I'm Prashant, with me my colleague Surabhi and Mangalam. Guys, hi, morning.
Hi, morning Prashant, morning Mangalam. And yes, indeed, what a week it's been, right? So feeling good this Friday. And I guess the market kind of, in this week at least, even moved beyond headlines. Even on days when the US market was faltering, we were charting our own course. And I guess that would make a lot of people very hopeful. They want to believe that the worst for this market is over. And then, you can maybe get into cruise control mode again.
Perhaps. What was most interesting is I was just looking at all the indices this week. None of the major indices have been in the red this week. The biggest underperformer this week is the IT index, which too is up 1.5% for the week. So, like you all said, what a week it's had. Let's hope the weekend is great enough and the next week continues, because that's the last week of this financial year.
Oh, absolutely. And, things have gotten much better, and we'll have to kind of sort of take it from there. I think we are, again, with enough caveats, etc., broadly maybe just sort of headed higher, but day on day, especially after the kind of week we've had, let's see if we are, if we give it some time to just ponder and reflect on the gains or whatever. It's, as I said, it's also going into the weekend. But just let's take it from the top. Not very much in terms of big cues at all. Equities in the US were slightly only mildly sideways. So S&P down about a quarter, Nasdaq was down about a third. Dollar index, it's been inching up about 0.5% in the last two sessions now. We're back at 103.78 on the broader dollar. Oil prices again have been inching up, so 2% up on Brent, and that's at about 72 plus now. Overnight, the big sort of talking point, or of course, Accenture, right, reported numbers, and they've basically, stock ended down 7% plus, and they're talking about an increasingly uncertain macro environment, but to be sure, they're essentially talking about their exposure to the US federal government, which is significant. And they're saying that it's about 16% of the US business, the US federal government. And, Elon Musk's Department of Government Efficiency, looking at contracts, etc. So it's just uncertain. Because of that, how much should you take away as an implication for Indian IT? I mean, I don't think that's very much. I mean, Indian IT, there may be other macro uncertainty, but this specific was an Accenture-specific issue with regards to the exposure to the US government. Now, Trump announced that after the New York close that the minerals deal with Ukraine will be signed shortly. Will we see something into the weekend? We'll have to wait. And of course, later tonight, you got about $4.5 trillion of options expiring in the US. It's a big one. I remember 2 weeks back, you had a big expiry Friday, and markets did sort of react in a negative way. So we'll see. Nifty and on the just the levels here, then not very different from what we've been talking about last few days. The daily and of course and the larger time frames are coming into view now. For example, the full fall from the highs to the low, the highs from late September, October last year to the lows recently, and you're starting to wonder about whether we're going to retrace some of these numbers. So if you're able to, if you're going to retrace that, you head to 23,600. That is a 38% retracement of the full fall that we've seen. But between here, where we left off yesterday, and 23,600, which we should head to, there are two resistance levels I want to put out, which is 23,320 and then 23,497. So watch out for these two numbers. On the way down, supports stand at the 22,797 is the 40-hourly exponential average. It's been, of course, as the market has moved up, it's pulling up these hourly averages very, very sharply as well. So that's the closest there in terms of a support. Nifty Bank continues to do well. No real signs of a reversal. We ended about 0.75% higher here yesterday. The resistance comes in at the 38 and the 50% retracement of the entire fall. Again, from the late September, October highs. 50,297 the first number. 51,085 is the next resistance. we left off at about 50,060 yesterday. And support stands at, again, the 40 hourly exponential, which is 49,190 this morning. So that's it. The gift nifty will come up on your screen. It's neither here nor there. It's about 25 points lower. There is enough buying interest. Gains have been broadening out. Broader markets have been doing well. And it's been a pretty good week so far. Surabhi.
Yeah, absolutely. I mean, no denying that it's a real feel-good factor as you get into this Friday. Of course, this piece of news on Accenture is something the market will digest. But, if you strip out Accenture's issues with the US government, which is where the negativity came in from, they've actually increased the lower end of their guidance. Instead of 4 to 7%, now their growth estimate is 5 to 7%. And there's some positive commentary on margins, etc., on Gen AI. So we'll see what the read-through for Indian IT is going to be. The other stock that was in focus yesterday, which kind of soured sentiment, was Nike. Nike, of course, is going through its own motions. It's setting its own house in order. But aside of that, it also singled out tariffs and uncertainties, currency action as a reason behind why it's expecting a double-digit drop in sales in the current quarter. Their current quarter ends in May. That stock in after-hours trading, last I checked, was down about 5% as well. So some of these issues are weighing on sentiment, so the US market was lower. By the way, Bank of England left rates unchanged as well. So it's one of those big central bank weeks where central banks have done nothing. BOJ, China, Fed and BOE, all of them have remained absolutely, on status quo. The European markets did, however, cool off yesterday. The German market was down over 1%. Now, Asia this morning, slightly mixed because these global cues are mixed. There's some selling in Chinese equities. Mainland China and Hong Kong are down. But Japan's higher, Singapore's higher. Those are some of the China and China-related markets that are trending slightly lower this morning. The talking point in terms of macros in Asia is inflation in Japan. Those numbers are still high. They've kind of, come down from January. The headline inflation number is at 3.7%. It was 4% in January. The core inflation is still at 3%, which is slightly above estimates. And therefore, the expectation of next move from the BOJ on the upside, a rate hike, that remains intact. So that's on the macros. This week, what a splendid week we've had. So let's put the numbers out there on the screen. 3.5% on the Nifty, 4.2% on the Bank Nifty, 6.3% on the mid-cap index, small-cap index 6.5%, and individual stocks, you would know from your portfolios anyway, when it's been anything between 10, 15, 20% of gains coming through. Yesterday's day is really important because yesterday was the expiry, so perhaps we had an accentuated move playing out in terms of some of the remaining shorts perhaps also covering. And then we had solid cash market buying. Look at the numbers, and this is what I was talking about, the way the large caps moved yesterday. So we do have confirmation, over 3,200 crores of solid, hard FPI cash coming in. Domestic institutions for a change on the sell side, selling over 3,100 crores. Lots of corporate action to track as well. Lots of interesting stocks in focus. I'll leave you with a little bit of a flavor. Manappuram, there is a big deal with Bain. Bain is coming in. They are coming in with about 4,385 crores of the initial investment. Then there will be an open offer and they'll become promoters of the company. We'll tell you more about this as we go along. Bajaj Finance, the mystery is finally over. Rajiv Jain will remain. In fact, he gets an elevation to the post of vice chairman. And Anup Kumar Saha is a new MD. And Hero MotoCorp is now getting into electric three-wheelers. They've acquired a stake in a small company. This company's name is Euler Motors. They spent a little over 500 crores, so that becomes another interesting piece of news to track, and we'll get you more details on it in just a bit. But Mangalam, yesterday you were telling us that, some of the shorts have been covering through the week, and I guess, look at that beautiful move we've got on the market.
That's exactly what happened, but I was very interested in what you said about Nike, because it was down about 5% overnight. What's interesting is that the Nike share price right now is back to where it was in 2020, right in the heat of the pandemic. And from there, it had seen a big rally. Things are restructuring out there. What happens to this world where they're looking at athleisure and looking at other things. I'm personally very keen on tracking that with the new leadership and what they do out there.
They should introduce a Mars line. Shoes for Mars.
Shoes for Mars, perhaps. Elon Musk will be the one who would be.
Which reminds me, was it? And correct me if I'm wrong. There's so much news flow. Didn't Mr. Besant go out and tell the world to buy Tesla?
Did he?
I think so. So, it all comes together.
The other thing was that when you spoke about the flows, there is the FTSE rebalancing today. So a lot more expected today as well, perhaps. So we'll keep an eye out on how all of this pans out. But, what's clear for sure right now is that bulls are in control. And why do I say that? Because just about 6 sessions ago, we had the Nifty, which was at a closer to 22,000. Right now, we're above 23,000. So it's a 1,200 point gain that we've seen in just the last 6 sessions. So that's the ferocity with which we've seen this rally. And, be that as it may, this rally has been actually led by the FIIs. Why do I say that? One, because they reduced their cash selling on a couple of occasions in the last 6 sessions. They also bought in the cash market. And secondly, the massive short covering that took place in index futures as well. If you look at the cash buying yesterday, was close to 3,200 crores. The DII is sold, but nothing really to worry about out here as well, because we know the kind of money that the DIIs have been pumping in. Now, in index futures, yesterday as well, there was 2,900 crore worth purchase, 6,800 long contracts added, 10,500 short contracts covered. What does this mean in perspective? March 13, the FII net exposure was minus 1.84 lakh. Over the next 4-5 sessions, it's come down to minus 1.11 lakh. The FII longs have increased from 19% all the way up to 30%. So basically, the shorts in just last 5 sessions have reduced by 40%. They've nearly halved, and longs have increased from 19% to 30% itself. So that's led to this big rally that we've seen. Where do we go now? On the last 3 trading sessions, the Nifty and the Nifty Bank have both conquered the 20 and the 50-day moving average, opening the road up for the 100-day moving average. The Nifty Bank closer to the 100-day moving average than the Nifty is. So can we go past this, 50,400 mark for the Nifty Bank and 23,500 mark for the Nifty itself or not? For the next week, we have options which are fairly active. At the lower level, 23,000 is the base. At the upper level, closer to 23,550 could be some bit of supply zone after the big move that we've seen. What are we tracking all of next week? One, there is the monthly expiry that plays out. It's also the end of the financial year. So we'll get order wins. There has been an accelerated announcement of order wins as companies close their books for FY25. So that is something we'll keep an eye out on. And finally, further NAV propping on financial year end. All of last week, we saw the underperformers the last 6 months, the likes of defense, PSUs, etc., bounce back. Can they continue to bounce in the next week or not is something I'll most definitely keep an eye out on.
Okay. All right, Mangalam, thanks for that. Lots to track, so let's straight away get to it. The equity call of the morning coming in from Lawrence Belanco of CLSA. Now, he's saying that the world ex-US rally of over 17% versus the S&P 500 since the December 2024 lows is now testing resistance provided by the upper boundary of its 15-year downtrend, as well as trading 2 standard deviations above its 200 DMA. He says this resistance zone and the pending reciprocal tariff D-Day of 2nd April is a logical place to see some hesitation and likely another bout of market rotation. In Asia, he says they have a new breadth thrust by buy signals in India's Nifty index. And that's the first time he's seeing that buy signal since 2023. So that's good news for us here. Lawrence Belanco on the technicals.
Okay, well, let's just hear out Lawrence on India as well, right? So he says that yesterday's break above the 50-day moving average has been accompanied by the first breadth buy signal since 2023, says a breadth thrust, which is basically the broadening of the market gain. Signal fires when the percentage of Nifty stocks trading at near their 4-week highs reaches 55% or greater. He says there have been 38 breadth thrust signals since 2002. Thursday is the 39th. He adds that the average returns 30-day, 90-day and 250-day post this signal have been Nifty gains of 3.8, 7.8 and 13.4% respectively, with a hit rate of 76, 74 and about 81.5% respectively. Lawrence says one can buy ICICI Bank.
That's quite interesting, huh? Breadth thrust signal, which CLSA is tracking. That's it's indicating, green tidings for us.
It's a tricky one to. It's a mouthful.
It's a difficult one to say. A breadth thrust. Wide market move going forward.
You say it slowly.
How do you calculate this?
Ask Lawrence.
No, so he said it's apparently certain percentage of Nifty stocks trading above their 4-week highs. Essentially. So yeah. Anyway, lots of indicators, but you can feel it, right? The market is turned bullish. The texture, as we've been saying, is turned bullish as well, and a lot of these signals will sort of follow that and show you that. So Lawrence saying there's more coming. Fu Ken Yap, a senior investment strategist at Standard Chartered Bank, is with us. Fu, great to have you with us here. Good morning. Thank you for your time. Will the 2nd of April spoil this small little party we've been having here? A relief party in that sense with this recovery. What's your sense?
Well, I think clearly India has gone through a period of, a bit of a downtrend since September. I think that the tariff news that Trump is talking about, I think it has implications for, everywhere actually. I mean, even America itself, not just outside of the US. And I think the news has been out there is creating a lot of uncertainty. The danger really is paralysis because of the uncertainty that people do not know what they want to do. And as a result, we saw the correction, right? I think there's a bit of worry about whether the US growth slowdown can lead to a recession. I think that is the crux of it, though. I think whether the US can avoid a recession or not this year, or is there a risk that it slows down too much, that it gets out of control? Now, our view is that no, we do get a soft landing in the US economy, and that'll be supported by the Fed rate cuts. And so ultimately, if we do get a soft landing, that really extends the growth cycle. And the headlines that's coming from Trump, I mean, there's going to be a lot more headlines. I think we've been discussing the Trump put and where's the Trump put, and it probably is lower than where the market is. But back to the fundamental, in the U.S. economy, can the U.S. economy continue to grow and expand? We believe that's our base case. It can, and as a result, then earnings will continue to grow. So global equities should be supported as well as a result.
Right. I'm curious to know your stance on India versus China, and what weights would you assign to the both? Because, China, multiple factors moving around. Yeah, the own economy not doing very well. There is the risk of looming tariffs, but then valuations are supportive. And at the same time, the government has been propping up, the narrative at least on consumption or easier policies out there. That compared to India, which has seen some underperformance and now looks like maybe at the base level, indicators are suggesting the worst is behind us.
Yeah, you're right. I think India went through a period when earnings revision was negative. I think the latest, when I looked at it, it is still negative in terms of the earnings revision. So just meaning across the street, there's a bit more downgrades on earnings relative to upgrades. And we think that is part of the headwinds that's been facing Indian equities. We do love it on a medium term. Definitely the structural story is in there, pretty well known. But the earnings revision story has been a headwind for India. China, though, it's been more of a valuation re-rating. We think the government standing behind it. And as the top policymakers meeting again with your private companies, private enterprises, being supportive of your AI developments and technology developments. And of course, the narrative from DeepSeek after January. But what we've been seeing has been a lot of valuation re-rating, very much from the bottom of the historical trading range, closer now to the average on some sectors like the technology sector or the Hang Seng Tech Index. We think it is still below average, and so there's still a bit more room to come in terms of the valuation re-rating. But really, for China to really continue over the longer term, I think we would need to see earnings improve and valuation improve. And we're going through our assessment at the moment, actually, in fact, for the Q2 outlook. I mean, when we published at the start of the year, India was our preferred market in Asia, although we were flagging there is a risk of the short-term implications that there's more excitement with China relative to India at the start of the year. Yeah.
That Hang Seng Tech Index, right? We think the Hang Seng has rallied 40% this year. The Hang Seng Tech Index, I think, is up 65%, if I'm not mistaken. So it's been quite a dream move. Folk, finally, so if we put all of this together, the fact that there's so much uncertainty around the tariffs in the US, and we've seen that, right? The US market itself has gotten into the stop-and-start mode. Do you see more money moving out of the US? And if that money starts coming to Asia, then within Asia, where do you really see it heading? Between India, the developments in China that you describe, Japan, I mean, where things seem to be reviving, at least in terms of the economy. Where does that US fund flow find its way in Asia, you think?
Yeah, in terms of the direction, I think we've been seeing a lot of funds flowing out of US and into Europe. Actually, there's some other things happening there in Europe, especially for the fiscal rules that's changing there. In terms of the fund flows that's been coming into Asia, look, I think the India story over medium term, we think is fantastic structurally. But investors are also very, very underweight in China. We believe there's been a lot of buying But actually, the buying has been coming a lot from mainland Chinese investors. They've got very, very high savings rate, but we saw that the southbound flows especially has been very, very strong, and that's been supporting the offshore market in Hong Kong relative to the one in mainland China. So the flows in China, in Hong Kong, actually has been very much driven by the mainland investors, I believe. So the flows coming out of the US, I think it will move around. I think in the short term, it is still supportive of China. I see what you mean, that India is off its lows. It's moving around between China and India. But the structural story in terms of the growth, looking at the GDP and inflation for the next few years, we think the nominal earnings growth in India actually is very attractive in terms of the structural growth there. So the flows coming out, coming into Asia, but at the moment, between India and China, I think it's coming into both, but in the short term, perhaps a bit more into China.
Yeah, absolutely. And that's if the Germans don't stop all that money flow before it reaches Asia, right? Like you said, we live in very interesting times. Thank you very much for joining in, and you have a good Friday and a good rest of the weekend. Thank you very much. Let's quickly recap what we have lined up for you on the show, beyond, of course, this first conversation. Lots of corporate interactions as well at 8:35. Shweta Daptardar of Elara Securities will join in to discuss Manappuram Finance and Bain Capital's big $1 billion deal and what it means for the stock and investors. At 9 a.m., we have Praveen Sahai of PL Capital Group to talk about Adani Enterprises' entry into cables and wires. 9:20 is time for our market masters. Gautam Chachoria and Vishal Goyal of UBS Securities are joining us today to talk about the overall UBS house view on India and what to do in this market. After that, RS Raja Gopal Sastry of Endurance Technologies joins in to talk about the quarter gone by and the business outlook. At about 9:50, Manoj Verma of Bikaji Foods Internationals joins in to talk about the business outlook. Will things improve? Remember, some of these bhujia and namkeen makers had a rough Q3. So is it going to get better now as there is more disposable income in the hands of people? Finally, Lata, in her segment, It's the Economy, talks with the three economists today and discusses whether the rupee is clearly out of the woods.
All right. Interesting lineup of commentary for you today. With that, we'll slim to our first short break. But as we do that, let's give you a slight preview into stocks that we are going to talk about in our special Top 10 segment. Bajaj Finance, Manappuram Finance, Bharat Dynamics, BEL, BEML, the entire defense pack. Along with that, we have Data Patterns and Astra Microwave, all of them likely to open in the green on the back of positive news flow. IT stocks, TBO Tech and Ola Electric, stocks on our radar on the back foot.
Welcome back. The smiles are wide, not just ours, but I think most people on the street, because it's been such a good week. And the cues are a little mixed, you'd have to say. But the Indian market has been charting its own course. Maybe today is a day of a bit of a consolidation, which is never a bad thing. 18 points lower on the implied open. Lots of stocks to track today. So let's straight away get to our list of top 10 stocks to watch this Friday morning. Our team is standing by. And we have Hormaz to kick off the proceedings with the big news on Bajaj Finance. So finally, we have clarity on the management changes. Hormaz, good morning. Tell us.
Good morning, Surbhi. And finally, as you mentioned, much awaited, the long-awaited overhang also on the stock has been finally addressed last evening, with Rajiv Jain being elevated to the post of Vice Chairman and Executive Director at Bajaj Finance for a 3-year period. His term is coming to an end as MD and CEO at the end of this month. So this was a much-needed clarity that the street was looking for. And Anup Kumar Saha will now be the new Managing Director for a 3-year period as well. So that is the important one. Of course, hints were there before as well. Sanjeev Bajaj spoke to us exclusively earlier this week. He also mentioned that Rajiv Jain remains very committed to the business and the board will take a call on it. And Rajiv Jain himself had given inclinations of that in the earnings call of the previous quarter, when he had mentioned that he would like to remain at the company and be actively involved in shaping the strategy of the company and its subsidiaries as well. So a positive development for Bajaj Finance. Price target hikes across the board from brokerages as well. Expect the stock to open in the green.
All right, expect the stock to open in the green. The other one that we're looking at is Manappuram Finance. The long-awaited Bain deal has happened, but not before the stock went into F&O ban in yesterday's trading session as well. Moved to the high point of trade in the last 30 minutes. But Sudarshan joins in with all the details. Sudarshan.
So like Bajaj Finance, this too has been long awaited after several reports over several months and weeks. Finally, the deal has been announced, and it's the deal of more than $1 billion, or say more than rupees 10,500 crore. Bain Capital is likely to going to acquire up to 42% stake, valued at rupees 10,500 crore, and the deal is being done at rupees 236 per share. So Bain Capital will be holding, like having joint control over the company with the existing promoters, and existing promoters will hold after the deal 28.9% stake, and currently promoters holding is more than 35% stake. Now, deal is being basically done in two parts. In the first part, Bain Capital is going to acquire up to 18% stake, and that would happen via both equity and warrants in the same proportion, that is of 9.3 crore each. In the second part, open offer Bain Capital will be making, and that open offer is also being made at rupees 236 per share, and that would be for acquiring stake up to 26%. All the regulatory approvals that Bain Capital would require are for this deal of RBI, IRDAI and CCI. Now, apart from this, Asirvad Microfinance, if you remember, it's a subsidiary of Manappuram Finance. It had filed for the IPO. Now, company has announced that because of this deal, now Asirvad Microfinance will be withdrawing its DRHP for the IPO. Now, because of the deal is being done at a much premium of 10% premium to yesterday's closing price, and nearly 30% premium if you take the average of last 6 months, I'm going with green because the deal has finally happened.
Ah, okay.
All right. Thank you very much for that. Well advertised, and it's finally sort of come through. We'll try and have the management to talk to us about this one. Well, let's talk about Accenture, right? I mean, the stock was down sharply last night, 7%, but for a very specific reason with respect to Accenture. Rima is here to contextualize this for us. Rima, morning.
Hi, thanks so much for that. So Accenture's Q2 numbers were fine. The company went ahead and raised the lower end of its full-year revenue guidance. From 4 to 7%, it now stands at 5 to 7%. But as you pointed out, the stock was under pressure yesterday on account of uncertainty related to its business with the federal government, in particular, what impact the Dodge will have. Now, what the company said in the conference call, the federal government services account for 8% of Accenture's global revenues. Accenture is one of the top 10 vendors to the US government. And the US government's guidance is that if the work is not mission critical, then cancel it. So therefore, there is a lot of uncertainty surrounding it. The company itself highlighted it in the conference call, Julie Sweet, the CEO, and that's the reason why the stock was under pressure. Indian IT companies in that context do not have a large exposure, very minimal exposure to the US government contracts. That's what analysts point out. Now, coming back to Accenture's numbers and what the relevance is for Indian IT, well, Q2 numbers, as I said, was fine. Deal bookings were a tad bit soft, so that's disappointing. But the company highlighted increased macro uncertainty again in the conference call. They're seeing an elevated level of uncertainty in the global economic and geopolitical environment. Discretionary spend, particularly the smaller deals, is still a bit constrained, though large outsourcing deals continue, which is a positive because vendor consolidation is still taking place. Back to you.
Okay, all right, Rima, got it. Thanks very much for that. So we'll watch out for all the IT names. We also need to watch out for a lot of defense names. Remember, yesterday, the Defense Acquisition Council announced procurement worth, several hundreds of crores of rupees. Vamakshi is here to give us the details. Vamakshi, good morning.
Well, good morning, Surbi. The DAC, that is the Defence Acquisition Council, has gone ahead and approved 8 defence proposals worth over 54,000 crores. Under these proposals, they will be acquiring, number one, 1,350 HP engines for T-90 tanks, and the key beneficiary of which will be BEML. Varunastra torpedoes, which is the second thing that they will be acquiring, which is an indigenously developed ship-launched anti-submarine torpedo. And the key beneficiaries for this will be BDL, that is Bharat Dynamics, as well as Bharat Electronics. Lastly, they will be acquiring airborne early warning and control aircraft systems, and the key beneficiaries of this, the list includes BEL, Astra Microwave, as well as Data Patterns. Now, in addition to this, the DAC has also approved guidelines for reducing the timelines at various stages of the capital acquisition process, and this in turn will help it make it faster, efficient, as well as more effective. So therefore, this announcement bodes well for all of these counters.
Indeed, and the defense stocks have seen a bit of bounce earlier this week itself. Thank you for that, Vamakshi. But TBO Tech is one of the stocks that Vivek is watching out for this morning. Vivek, why?
That's right. So a block deal was launched in TBO Tech last evening. We had access to the term sheet. So there are two sellers, both part of the public shareholding. Augusta TBO Singapore as well as TBO Korea Holdings. Both of these entities are combined will sell close to 3.1% of the total equity. The deal is likely to happen at a 7% discount to yesterday's closing. So the floor price of the deal is at 1,180 rupees a share. Total size of the deal is close to 400 crore rupees. And remember, there's a lockup of 30 days on further sale of shares by both of these entities. So going with the red as far as TBO Tech is concerned.
Okay, all right, Vivek, got it. So TBO Tech on our list as well. Ola Electric, the news flow continues to be difficult around the company. And yesterday we heard people from the Maharashtra administration talk about taking some very specific penal steps against the company. We have Parikshit joining in to tell us what the latest is. Parikshit, morning.
Well, Ola Electric has confirmed the CNBC-TV18 news break that they've received letters from MHI and MORTH about discrepancies in their sales data. In fact, sources tell us that they've actually got a second letter from MORTH, the Ministry of Road Transport, because the government was not happy with the first reply that Ola Electric had given to the government. Having said that, we can confirm to our viewers that 34 of Ola Electric stores in Maharashtra have been sealed. They have faced similar inspections in Madhya Pradesh, Karnataka and Punjab as well. So the regulatory scrutiny for Ola Electric has been increasing. 36 scooters have been confiscated in the state of Maharashtra alone, pending investigation. At the same time, Ola Electric is claiming that they have sold around close to 40% of the Feb backlog has been cleared, but we really need to see as to how much of the scooters which have been registered and sold in the month of March are for the month of March and are for the month of February as well. So a lot of questions still for Ola Electric, and the Ministry of Road Transport and Highways and the Ministry of Heavy Industries continue to ask questions about differences in sales data.
Right. In fact, thank you for bringing us up to speed with that, Parikshit. In fact, let's listen into the Maharashtra Transport Commissioner speaking exclusively to CNBC TV18 on this very issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai. And we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and on getting the reply from them, we will take the further action. Around 36 scooters have been confiscated. I mean, they were impounded, not confiscated, they are impounded. And as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises, so the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, this premises has been seized and they are not operating from that premises. See, we have received the complaint regarding this mismatch in the Vahan data also, and we are examining that. Right now, I will just say that we are examining the complaint. If we found anything wrong, we will take the action.
Ola Electric was down about 4% in yesterday's trading session. Regulatory issue run-ins continue for the company. We'll keep an eye out on the stock in today's trading session as well. But let's get in a roundup of all the commodity market action. Manisha Gupta, as always, joins in. Manisha, what did you track overnight?
Well, I'm looking at the copper prices really, because we're trading at near all-time highs on LME. We have seen $11,000 a ton breach on the higher side as well. Well, copper has been the best performing commodity, or rather metal, when you look at base metals and non-ferrous space as well. 28% up in 2025 till time. Traders are redirecting shipments from Asia to US ahead of potential tariffs that the US administration has been talking about for some time now, and that seems to be adding premium to prices there. Also, when you look at the US copper prices vis-a-vis the rest of the world, we are at a near record high premium in the US markets there. Well, not just copper. If you look at the gold prices, holding at record highs onto that one as well, at around $3,050 an ounce. And then you have the crude oil prices, which are headed for a second weekly gain. The markets are looking at fresh U.S. sanctions on Iran. And then OPEC is planning to cut output for 7 members until 2026. So all news that seems to be coming in has been very supportive for all these commodities.
All right, Manisha, thank you very much for that. The commodities in focuses. We'll take a quick commercial break here. We speak about the Manappuram deal, Bain deal, and we'll have the analyst from Elara, Shweta Daptardar, is the Vice President, Diversified Financials at Elara. So, conversation coming up. Okay, welcome back. It's a big story coming through on the bottom of the screen. This is Viatec Vabag. The companies will use fund towards capital project investment. I think there is some money coming into Viatec Vabag. The first news flash. Signs non-binding term sheet with Norfund-led consortium for $100 million funding over the next 3 to 5 years. We'll try and have the management join us to talk to us about this one. So it's a widely tracked name in the right space. Stocks corrected from, I think the highs were closer to 2,000 and now just under 1,400 rupees or so. Well, let's talk about all the financial news flow from last night. Manappuram, of course, was the big one. That Bain Capital deal has finally come through, widely anticipated, as I said earlier. Shweta Daptardar is Vice President, Diversified Financials at Elara Securities. Shweta, good morning. Good to have you with us here. What did you make of it? And what does the stock do really? I mean, lots of fans for Manappuram, lots of backers, really people who were willing to bet on Manappuram doing very well. It's kind of struggled though relative to the larger peer, which is Muthoot. Does the Bain deal provide some structural tailwinds from here?
Yes, good morning, Prashant. So as you rightly pointed out, this is definitely a turning point in the journey of Manappuram business. Bain deal happening especially at a premium of over 30% over last 6 months. Stock price definitely provides or instills confidence amongst the investors in terms of growth as well as professionalization prospects going forward. Most importantly, as you rightly pointed out, Manappuram has been dealing with challenges with increased regulatory scrutiny, especially on usurious pricing, as well as microfinance-led challenges. So the timing of the deal is also opportune, and we believe going forward, this definitely puts up the entire management team and prospects in the right perspective.
Right. Shweta, as per your model and the prices at which Manappuram and Muthoot are trading right now, what is the valuation discount between the two? And post this deal, do you see a case for that multiple discount to narrow? If yes, then by how much?
Yes, so if we compare the largest market leader in the space, that is Muthoot Finance, who is trading at 2.4x price to book FY27, and if you compare that with Manappuram, which is still trailing way too behind at 1.1x, so you see there is massive valuation gap, and rightly so. But with this news, while the gap should narrow, it shouldn't be completely closed, given that Manappuram is yet to deal with structural challenges. Execution is also key, and we also certainly believe that once the entire transaction consummates in Q2, Q3 FY26, we also reckon there will be 1 or 2 quarters of kitchen sinking for all the cleanup that is required. So we believe while the gap will narrow in the first place, I think it will not completely close vis-a-vis the top-notch market player.
To your mind, what should the ideal multiple for Manappuram be versus Muthoot?
Yeah, so yesterday night, post the news, we have upgraded the valuation multiple to 1.3x forward. We were initially valuing at 1x, although it definitely deserves slightly higher multiple than what we are currently envisaging. But like we mentioned, we are still reeling under pressures, both externally as well as Manappuram per se internally. So definitely we'll keep a close watch. And like I said, execution is key. So for now, we would sort of be slightly reluctant to go overboard given the scenario on even the macro trend side.
Shweta, that's on Manappuram, the gold financiers in that big deal. The other big news last night was, of course, Bajaj Finance. So Mr. Rajiv Jain has been elevated to Vice Chairman and ED now. The stock's done really well, actually. It's been the best performing stock of 2025 so far in a difficult market phase. What's your call on it, and how do you see this management development?
Yes, morning, Surabhi. So yes, Bajaj Finance definitely has did well, especially in past one quarter, and rightly so in anticipation of this big news with Rajiv Jain being elevated. But the good point or the brighter side here to look at is he's being elevated and continues to remain associated with Bajaj Finance. So there were a lot of speculations that he would be going into a chairmanship role at the parent company or might take a back seat. So the biggest and the brightest side is he continues to be there, providing mentoring and supervision at the Bajaj Finance business. So that's definitely positive. Second, if we look at the industry per se, the unsecured lending challenges are receding. The RBI coming up and mentioning that they are satisfied as far as personal loans slash unsecured lending traction is concerned. So that comes as a big positive. I mean, given the fact that NBFCs have been dealing with or navigating a peculiar landscape for the entire FY25, certain reliefs coming from the regulatory per se definitely bode well. And last but not the least, the rate cut tailwinds will definitely augur well for financiers like Bajaj Finance.
So what are your top NBFC picks right now?
Yeah, so in the current scheme of things, we continue to maintain positive stance on Bajaj Finance. We definitely believe gold financiers are ahead in terms of recovery. So we like Muthoot Finance. We like Shriram Finance. We believe there are tailwinds emerging, although there is divergence in terms of how CVs and sub-segments of CVs would perform. But Shriram definitely is a value pick. And last but not the least, we still have inclination for PSU financiers, wherein we continue to place our bets even on Power Finance Corporation.
All right. Thank you so much for joining in and giving us your views on a whole host of financials. You still like the PSU financials, and you believe that there is room for further multiple upgrades coming in from Manappuram as well, and good news coming in from Bajaj Finance. So that's about the NBFC space this morning. Let's welcome Siddharth Khemka, who joins us now on the show as well. Siddharth, good morning. One of the sectors that has been doing extremely well in terms of gains after a big drubbing is the defense space. And overnight there was news that has come in as well, where the Defense Acquisition Council has approved a massive amount of orders / purchases as well. Who do you think stands to benefit? And do you think this rally in defense stocks resumes and we look at them going back to their previous highs?
Good morning. So if you look at the sentiments are again turning in favor of defense stocks, not only in India, but globally, there is increased talks of higher spending, and India can be a key beneficiary. Last few years, we saw the government also pivoting towards not only making for India, but also looking at exports as a key focus area. And I think with Europe looking to increase its defense spending, I think India, some of the Indian defense players could benefit out of that. Some of the leaders in the defense space, we believe those would continue to benefit. For example, what we like, Bharat Electronics consistently doing very well. We've seen the order book increasing in the last few weeks, and the government rushing in to achieve its order targets for FY25. I think the order inflows will keep coming in, and if you look at growth, continues to remain pretty strong even for Bharat Electronics. We are forecasting a 20-22% earnings growth. Valuations remain comfortable now at about 35 times on a forward earnings basis. The other stocks that we like, HAL and Mazagon Dock, both in different areas, HAL in the aviation space and Mazagon Dock in the defense shipyard space. All three of them are market leaders, continues to have a strong order book, strong execution, and healthy earnings growth, supported by a decent valuation.
No, absolutely. Sid, morning. KEI, Polycab, Havells. Those saw big cracks for the second time. Same news flow. I mean, a large entrant making it into their industry. What's your sense?
Yeah, Prashant, I think there is definitely a big dent to the sentiments for the sector if a lot of large, the challenge is these players have large balance sheets and they can put up large plants, and the details of Adani Group's plans are still not yet out. So I think a little bit of impact only on the sentiments. Ultratech plant will come up only in 2 years. We'll see very strong numbers from all these players in Q4. But the days of premium valuation, I think that will go away. And within the space, what we like Polycab. We downgraded KEI despite strong numbers to a neutral, given the premium valuation that it was enjoying. We believe that cannot be sustained anymore. Polycab is a market leader, and we believe that the impact on numbers will not be to that extent compared to some of the smaller players. And it has the most diversified book, and I think earnings growth compared as well as the market leadership would continue to support valuations for Polycab, where we have a buy rating, and we continue to like that stock.
Okay, Siddharth, we want to just also, you may want to listen in to these sound bites next. So the Aditya Birla Group Chairman Kumar Mangalam Birla has announced 45,000 crore rupees in investment plan for Hindalco's copper and aluminum businesses. I mean, this was on the sidelines essentially of a rebranding exercise for Hindalco, which is of course one of the largest in that group. Let's just play that out, and we have a few other things.
Birla Copper, for example, is setting up India's first e-waste recycling plant, extracting and recycling metals from discarded devices. And we are committing rupees 45,000 crores across the aluminium, copper, and specialty alumina businesses to deliver both upstream as well as next-gen high-precision engineered products to our valued customers.
We are going to now, in this next phase, expand our upstream capacity. So alumina refinery, a new one, aluminium smelter expansion, a copper smelter expansion, a copper recycling plant, and also downstream projects like aluminium foil for lithium-ion battery, fused alumina, the specialty alumina for the steel industry. So a combination of upstream and downstream. And Hindalco's balance sheet is extremely strong right now. We are net debt to EBITDA negative, and we generate a lot of cash. So our feeling is that we should be able to largely fund this capex from internal accruals.
Mr. Pai also, of course, talked about U.S. tariffs, potential U.S. tariffs, right, on metals. Hindalco, of course, has got Novelis, which operates out of the U.S. Listen in.
So I think that, I have been on record for saying that tariffs that are announced by the US are sort of neutral to mildly positive because we have a large business in the US.
Yeah, so they operate out of the US, so they're not that, adversely impacted. We'll take a break on that note, come back on the other side, and we'll discuss more stocks, more ideas, including, of course, the technical setup of the market back in just a bit.
Well, it's a Friday and we are discussing a lot of stuff during the breaks, food and snacks and all of that.
Must start planning, forward planning.
Definitely. But, speaking about forward planning, what does the market look like next week and today itself? Bulls are in full control. Mitesh, what do you believe, happens today and all of next week from a chart check standpoint?
Good morning. It's been a good rally, and typically as we approach the weekend, there can be some profit booking, and we are also now close to overbought on the hourly charts at least. My sense is that the trend is on the upside. Today could be a slightly more volatile day compared to what we have seen in the last few days. But what is important is that, yesterday we had a gap up on the Nifty, which was not filled. And I think that becomes the first support area. So I think anything close to about 23,000 is a very big spot, which is about 180, 190 points lower from here. And I also maintain that we will most likely head towards 23, 550, 600 zone, which is where the weekly averages come in. So given that kind of view, the outlook is positive, stay long. In case you get a 100 to about 120 point kind of decline, in case, you can add there more, but otherwise stay long. Very clearly, this market is biased on the upside, though after 4 days of rally, there could always be a few hours of volatility and profit.
Right, and your call on the Nifty Bank and individual stocks?
Yeah. So for the Nifty Bank, I've been looking at a first target of around 50,400, 500 area. This is where the Nifty Bank made a high in the first week of February, and since then went into a corrective decline. So around 50,400, 500, I think, that's where the Nifty Bank can take a pause. But the overall chart structure does suggest that eventually it should cross that and head towards 51,400, 500. So there's again significant upside left over here as well. On the individual stock side, I have a buy on HDFC Bank. If you get it around 1760, 1762, buy with a stop below 1740 for a target of 1800. Reliance is something which has been a recommendation on many occasions in the last few days. It's again a buy today with a stop at 1254 for a target of 1300. A buy on Cipla with a stop at 1490 for targets of 1560. And Steel Authority sale, I would want to see the stock price get past 115. Yesterday also, I think it made an intraday high around there. Day before yesterday, it was the same level. So once it crosses 115, buy with a stop just below 113 for a first target of 120.
All right. Got that, Matish. Thanks very much. Stay on. More questions for you in just a bit. Shrikant Chauhan is also with us. Shrikant, good morning and happy Friday to you. What a great week it's been, right? Let's start with the index. What are your trades?
Yeah, absolutely. The market did really well in this particular week. And in fact, on Thursday, the market has broken all its important resistance level without any major efforts. So that is something which is going to support the market in the medium term. The most important part was that the market has broken the level of 50-day simple moving average, below which the market has spent a lot of time. I'm to say since the announcement of the budget, whenever the market has tried to move these levels, we saw a good amount of profit taking. But yesterday, the market has broken this level. So broadly, I am of the view that we are heading towards the levels of 23,400, 500 sort of levels. But there we need to be careful because all these F&O contracts are also maturing. And there we need to be careful. We are expecting some profit booking close to those levels. So ideal strategy should be to look for adding position if there is any correction. Close to 23,000 levels, we feel the market is having good amount of support, and there we should look for taking some contra bets of going long. And Bank Nifty also around 49,700, 600 level, we should look for taking some long bets. For stock specific, as Mitesh said, yes, we like Reliance Industries, and most of the time at the last leg of the rally, I'm going to say the markets, as the markets have rallied nearly 1,500 points, we need to be careful at higher levels, but at the same time, at the last leg of the rally, we see some specific buying interest in Reliance Industries. So this time also I'm expecting stock to move towards the levels of 1320, 1325. And at current levels, the risk reward ratio is quite favorable. We can keep stop loss at 1245 or adding any long positions. We also like BHEL, Bharat Heavy, which is around 206, 207. All these capital goods and infra companies are doing well. In that, this particular stock is showing a lot of strength. And here also we are expecting 215, 220 sort of levels. So we can keep stop loss around 204, 203 for creating long positions on BHA.
Okay, so going with a bit of a PSU play as well. Got that. All right, gentlemen, we'll come back to you a little closer towards market opening. Right now, need to take a very quick break. We'll be back. We'll have the pre-opening rates. And also, we get a conversation going on the big sell-off that we saw in the wires and cables side of the market yesterday. Adani is entering. Ultratech announced its entry. Now, what to do with these stocks? We'll get you some analysis from PL. Praveen Sahai joining in. Welcome back. Well, just about 13 minutes to go before we get the actual rates. The pre-opening rates are going to come up on our screen in just a bit. Let's actually see what the Nifty is doing. The expectation that would be maybe a little bit of a stretch, 350 points higher, because the implied open was telling us that we'll probably start 10-15 points lower. Slight consolidation, considering global cues are a little mixed at this point in time. Siddharth Khemka is still with us. Siddharth, what thoughts on some of these auto stocks? I don't know, if there's any point looking at it, because we know that sales are not happening. All of them are hiking prices, Maruti, Hyundai, etc. Ola has its own problems. Hero yesterday announced entry into electric three-wheelers. So there's a lot of news flow. Are you buying anything in autos? And by the way, TVS is giving a 10 rupee dividend, let me add. So much of news in autos, which is actually great. Solid 10 rupee dividend from TVS Motors.
Yeah, I think this sector always remains in limelight some way or the other. We heard the Ola electric woes continuing, and the two-wheeler space continues to remain under pressure. Hero reported very weak numbers. So that's a space, again, looks weak. The metal prices going up, that is a bit negative for the auto companies. And we saw on back of that, companies announcing price hikes. The last price hike they had taken was as recent as Jan, and they are taking another price hike. That just goes on to show the pressure on margins. In this entire space, what we like tractors. They're consistently reporting very strong numbers, and in that also M&M is far outpacing the industry demand. Plus the launch of the new electric vehicles, that is picking up well. We believe that could be another strong foot for M&M in the passenger vehicle segment. There were concerns with regards to Tesla's entry, and the stock has corrected, which we believe is a good entry opportunity for investors into M&M. We believe that's the only stock that one can look at in the OEM space. We have a buy rating and target price of 3,675.
Right. We'll keep an eye out on a couple of things. Hindalco in pre-open is higher by about 1.5%, closer to 2%. There was some, announcement that came by in terms of a rebrand, 45,000 crore capex. Yes, the street was aware of that, but the fact that they are looking at newer avenues of growth, we're keeping an eye out on that. And Manappuram Finance itself, which was, touted to be the stock of the day, premium of almost 20-25 rupees over the previous close with regards to the deal price. And the stock has opened right close to the deal price itself, 239 versus the deal price of close to 236. Mind you, it is in the F&O band, so we'll keep an eye out on that. And don't lose sight of the rupee as well. While we were hearing that conversation coming in from Siddharth Khemka, the rupee itself has opened about 14-15 paise stronger versus yesterday's close. And that's important more so because, one, rupee's been gaining strength. Secondly, yesterday, the dollar index did not weaken further. Yeah. It, in fact, from 103.5, closed at around 103.8, 103.9. In light of that, if there is strength in the rupee, then that's further positive from an FII standpoint.
One of my favorite songs, Money, Money, Money. And it's the money that came in yesterday, the FPI buying. That's definitely helping.
Plus the anticipation of more money coming into because of the FTSE rebalancing.
And maybe exactly that. So, the whole flow situation really seems to be helping our currency do a lot better than, the dollar strength, like we've been saying. When we started the week, the dollar was closer to 103.3, 103.4. Ending the week, it's closer to 104, and yet the rupee has done quite well. So it's good going. The pre-open Nifty has settled about 35 points lower. That's what we have on the screen. Bajaj Finance doing well. And the other one, like Mangalam pointed out, Manappuram Finance, up about 8-9%. Two important stocks of the morning. Let's put the spotlight on the wires and cable space now. In fact, we should get some of these stocks up. Let's see if there's any recovery. KEI, Polycab. Yesterday, these stocks are absolutely slammed, bombed out, because of the fact that along with Ultratech, now we have another giant entering the wires and cable space, and that is the Adani Group. So what could potential impact be? We have Praveen Sahai, Vice President Institutional Research at PL Capital Group, joining in. Praveen, good to have you on. So, I'm just going back and reiterating what these companies told us after the Ultratech entry. We remember the whole price damage and the drama that happened. And then there were the conference calls, analyst calls. And the incumbents claim that gaining scale so quickly will not be possible, even for a giant like Ultratech. But realistically, what is the disruption that you would anticipate now that we have two biggies in the fray?
Yeah, thank you. Definitely the entry of the new entrant, and that's the conglomerate. Definitely the way forward in the long term will impact. But also we had to consider that this sector is growing at a 12.4% CAGR, and that is also giving a big opportunity the way forward for all the players, I believe. So just to give you some numbers, like currently 84,500 odd crore of wire and cable, it will reach by FY29 to around 1,52,000 odd crore. That will generate an incremental 67,000 odd crore of revenue. So, and also if you look at the current position of the top 5 players, top 7 players, if I look at, they account 54% of the entire market. And for this 67,000 odd crore of a revenue, sector requires around 15,000 odd crore of a capex over the next 4 years. So, and so far, top 5 players has announced yearly, clubbing together all 5 players, yearly run rate for a capex is around 2,500, 2,600 odd crore. So still there is a room for a new entrant to enter, explore this opportunity. And I am in a view what the companies are saying, that's definitely there would be some timeline, some 18 to 24 months for the commissioning of their facilities. Post that the approval process is quite lengthy, especially in the cable business. So at least a 3-4 years time frame required to come to an optimal utilization of what they are announcing right now. And they had also so communicated, especially the Ultratech has already communicated about these things. So I think the opportunity is going to be big, and the entry of these players will adjust in that without hampering the large players like of a KEI or Polycab growth rate. But one thing is for sure, and that's what happening right now, is a de-rating in the sector. So pre-COVID, if you look at these sectors from 16 to 2019, traded at around 17 times. Now the post-COVID, and when say the example of KEI delivered a 42% of earnings CAGR. Post the COVID, 21 to 24, earnings CAGR were around 29%, and the stock got re-rated and reached from 17 times to 50 times. And now the de-rating because of a new entrant is happening, and that's I believe this sector to be in the range of around 35-40 times, not more than that. And right now the Polycab or KEI reduced to around FY27, 27 or 28 times. So definitely the correction is large. Yeah, go ahead.
No. So my question was, this correction is large, but people are of the view that this correction has been done much ahead of the anticipated disruption, and the valuation multiple correction has already happened, and maybe perhaps it's the time to buy. Would you concur with that view?
Yes, definitely. I am with you. Because as I said, this sector where the growth rate, the earning growth rate is expected to be range of around 23-24% the way forward. And also the sector is as a whole growing at a 12.5-13%. These companies already did capex. Their guidance is nearly around 17 to 20% of growth in their top line. So sector growth is intact, ROC profile around 25-27%. I believe it should be in the range of around 35 to 40 times, which has already reached to a 27-28 times. So I will be buyer over here.
Well, the counter argument for that is these entrants are big players, and in their overall scheme of things, cable and wires don't account for too much, right? So for them to wipe others out, all it would take is for them to incur EBITDA losses of a couple of years, which will not account for too much. But for the others, that would be a big dent. Would you believe that in light of that, there could be further downside from levels that the street is anticipating right now?
So what you're saying is definitely they can do. But these, as I said, wire entry or the LT cable entry is quite comparatively easier as compared of the ST cable or extra high voltage cable entry, where you required a very lengthy process of approval for your product and the plant wise. It takes time. It's not a difficult process, but it takes time, very lengthy process. And that is why the sector peers are saying, and we are also in the view, it will take a time, at least 3-4 years to come in the market and dent. And definitely that is going to derate, and what the sector got derated actually. So even immediate effect on the next 2 years time frame on the financial, we are not in a view of that.
All right. And your top picks would be?
In the wire and cable, definitely the KEI and the Polycab after so much of a correction, and they reached to a 27-28 times of FY27 earnings, we are liking.
All right, take that point. Thank you so much, Praveen, for joining in and setting us up for, looking at this sector now. You believe that maybe the valuation derating has already happened and this dip could perhaps be a buying opportunity. Good time to get in Mitesh once again. It's 9:10. Mitesh, your 9:10 call would be?
I'll go with the buy on Steel Authority once it starts getting past 195.
Steel Authority sale is the purchase idea that Mitesh has given. Meanwhile, just keep an eye out on a couple of stocks from the pre-open as it settles now. We have the Nifty IT index, which is down about 2%. So that could cause a bit of a lid on the gains that we could see perhaps, dented further as well, because the Nifty IT index outperformed in yesterday's trading session on the back of improving prospects from the Nasdaq standpoint. United Spirits is another stock which is up 3%, and we are seeing some bit of pickup in names like KEI Industries, etc. as well. But the second half of this trade today will be very crucial because of the FTSE changes, the adjustments that will take place. What are the stocks and what are the flows that are expected in those stocks? Vivek joins in with a list of that. Vivek.
Well, good morning, Mangalam. Absolutely right, especially in the last hour of the trading session today. The FTSE index changes. Remember, these are part of the semi-annual index review of the global index equity and all of the India stocks that will be added to the FTSE all-cap index and the all-world index will be the ones that will be impacted in the session and will see significant buy flows. There are no major deletions as far as FTSE is concerned, but there are 13 additions this time around. Amongst the 13 additions, remember all of these together, along with the various weight increases that some of the Indian stocks already in the FTSE, will be a net inflow event for India. Close to $1.4 billion of net inflow is what India can expect to see and India equities can expect to see in the last hour of the trading session today. So it will be important to also track the FII buy figure today once it comes out post-market hours. Now, which are the 13 stocks? 361 AM, Ajanta Pharma, Apar Industries, Bajaj Housing Finance, Blue Star BSE, CDSL, CRISIL, Fortis. IndusInd will see significant inflows of close to $25.5 million. It makes its entry into the FTSE index. Keynes Technology, Nalco, as well as Premier Energies are the ones that will make their entrance in the FTSE All-World All-Cap Index. And along with that, one particular stock that was included but has since been rolled back is FACT, that is fertilizer. That particular stock will not be making its entrance as far as FTSE is concerned, but $1.4 billion of inflow as per estimates of IFL is something that we need to keep an eye out on.
Yep, we take that point. Thank you so much for that. Just a minute to go for market opening. Meanwhile, we were speaking about Citi on, rather United Spirits, right? So there is Citi, which is written on United Spirits. They've actually upgraded the stock to buy with a target price of close to around 1650 odd rupees. They believe that the near-term growth trends would continue to be positive because of the prestige portfolio, and also there are policy tailwinds expected in Uttar Pradesh. There is a leadership change out there from the start of next financial year where Praveen Someshwar takes over as Hina Nagarajan moves on to another role in the global business itself. So we will most definitely keep an eye out on that. As of now, the start looks like it would be about 20 points in the obverse side. We have the market which is open, 30 points lower for the Nifty. A mild tinge of red is what you're seeing, but it looks like it has been it's holding on around that 30-40 point downtick itself at the open. The mid-cap index has it a little worse right now, down about 124 points. What are the stocks doing? Let's look at Bajaj Finance. That's the big one. The top Nifty gainer today as Rajiv Jain's elevation has buoyed the street out here. On the way down, though, it's the IT stocks which are, pressurizing the Nifty. Cautious commentary coming in from Accenture. So the top loser on the Nifty today is Infosys. We have LTI, Mindtree, TCS, HCL Tech. In fact, among the top 5 losers on the Nifty, all of them belong to the IT pack itself. Infosys, LTI, TCS, HCL Tech, Tech Mahindra, Wipro as well. So that's the single biggest contributor on the downside. The Nifty Bank is actually outperforming, opened slightly lower, thereafter saw a bit of a pickup and now just trudging between green and red itself. The broader markets, Manappuram Finance has to be the stock of the morning, opened up about 1.2%. But let's see where it goes from here. From a volume standpoint, there could be a bit of an impact, largely because the stock has also entered the F&O band, so we'll keep an eye out on that one. What that has done, however, is taken all the other financial stocks higher with it. Maybe perhaps a positive rub-off of a deal happening in that space. So we have Poonawalla FinCorp, which is higher. Aditya Birla Capital has opened about 1.5% higher. AU Small Finance Bank as well is higher. We have Jio Financial Services, which continues to do well. We spoke about the positive brokerage note coming in on United Spirits. That stock is higher by about 2.2%. We have Jio Financial Services for the third day running doing extremely well. And we have KEI Industries. All these wire and cable stocks, which had taken a bit of a drubbing yesterday, are seeing some bit of bottom fishing today, with KEI Industries having moved higher by about 1.5%. Senco Gold, for the fourth trading session, the stock has been locked in upper circuit, a 5% upper circuit, making the gains of almost 14.5-15% for this week itself. Defense stocks not doing too bad either. We have Bharat Dynamics, which has opened higher by about 4.5%. BML up around 4% as well. And just before open, we got that news coming in on VA Tech Wabag that there has been a funding announcement of almost $100 million. That stock too has opened higher by about 3%. On the way down, we are seeing a decline on TBO Tech. As Vivek pointed out, there is a block deal out there and some bit of profit taking on names like Shipping Corp, which saw a big move in yesterday's trading session, along with something like a Green Lamb, which goes X bonus in today's trading session. So the mid caps now have recovered. Nifty just about flat, led by the Nifty Bank, pressurized by the IT index, and the broader markets doing a lot better than what they were at the open itself, for 1,300 stocks in the green, for about 720 stocks which are in the red. So we'll keep an eye out on the markets. We're also seeing some up move on names like Nestle India, some perhaps pick up in the auto space as well. So Maruti Suzuki is up around 1%. Trent is also seeing a bit of a pickup. Shriram Finance is the other one, which is up around 1.3%. Oil prices saw a bit of an uptick overnight. So let's see whether ONGC and Oil India continue their up move. They've opened in the green by about 1%. Let's see how that pans out as well. But Bajaj Finance is one which is doing extremely well. Let's go across to Hormaz. He has a list of all the brokerages that have written on some stocks this morning. Hormaz, Bajaj Finance is the top Nifty gainer right now as we speak. It was expected. What are the brokerages making of this development? I presume positive all around.
Positive all around indeed. Top Nifty gainer of the day, top Nifty gainer so far this year as well has been Bajaj Finance. The key overhang on the stock has also been addressed, right, with the elevation of Rajiv Jain as Vice Chairman and Executive Director for a 3-year period. Anup Saha is now the new Managing Director as well. So brokerages across the board have raised their price targets on the stock. With starting off with Citi, it's maintained its buy rating. It's raised its target to 10,200 rupees now. And it said that the leadership continuity and strategic clarity is now lending more credibility to the seamless execution for Bajaj Finance, and that the concerns around this management transition have now been mitigated. Morgan Stanley too, he had an overweight rating. It had put out a scenario analysis as well. If Rajiv Jain indeed does stay on at Bajaj Finance, it has raised its price target to 10,500 now from 9,300 earlier. It said that Rajiv Jain's continuity will improve investor confidence and the sentiment as well, and the investment thesis for Bajaj Finance is now the strongest among the large cap financial companies, and it also expects the re-rating that Bajaj Finance has had recently to sustain, and also strong returns is what it is expecting over the next 12 months. The CLSA 2 on Bajaj Finance has maintained its outperform rating. It has the highest target on the street, though 11,000 rupees from 10,000 rupees earlier. It said that it is the top pick. The focus is back on fundamentals now with the management transition now in place. The credit costs are near their peak and they should taper down from FY26 onwards, and it is expecting a 26% profit CAGR over the next 2 years. So as many as 5 analysts now expect the stock to cross levels of 10,000 and above. Positive commentary coming in all around.
Positive commentary coming all around. In fact, now as we speak, the real estate pack has picked up. It has been the best performing index all through, all through the week. And now we have DLF, Prestige Estates, all of them picking some pace as well. But let's go across to Prashant and Surbi, who've moved studios for now to get in a good conversation coming in on the markets itself. The team of UBS joined them. Prashant, Surbi, take it away.
It has been a great week for markets, with the Nifty up about 3.5%, the Nifty Bank about 4%, and the small cap index up 6.5%. The big question many are wondering is if this is a bear market rally and they can be powerful when they come, or have we really for sure seen the worst of the downside levels? The other question, of course, is if you believe the time is to be constructive, is what to buy. Financials is one consensus overweight, but what else? Lots of stuff moving around. Surabhi and I'll discuss all of this in this special conversation with Gautam Chachoria, Head of Global Markets, UBS Securities, and Vishal Goyal, Head of India Research and Banks Analyst at UBS Securities. Gautam and Vishal, great to have both of you gentlemen here with us on the program. Appreciate your time as always. Prashant, this side. Gautam, I mean, so as I prefaced in this conversation with that comment about is the bottom in, not in, a bear market rally. So let's just get that out of the way, because I think that is the number one question in the minds of, I guess, most who are watching this broadcast.
Sure. Thanks, Prashant, for having us here. Look, from a tactical near-term perspective, it looks like the bottom has been made very clearly. And that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions, both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known. But that is market definitely has bottomed down.
Is you threw in the word tactically? So it's like the caveat there. But you think tariffs are the big one? I mean, that is the big one. So on the second. And so let's just get that out of the way as well. Do you think it's going to be a big one? It's going to be something to be, so they'll go max high tariffs. I mean, they've said they'll hand over a number to each country. And India has been mentioned many times as a high tariff country. So they'll hand over a number on the 2nd of April in terms of what's the cost of doing business with each country. And the expectation is that they will back down from that level. So it could be a high number to begin with, and then perhaps negotiations, etc. What's your sense? And how much of a risk is that for the broader market, Vishal? Sorry, that's for Gautam. Sorry.
Sure. Okay, look, for tariffs, we are less worried about how it impacts India directly in terms of what US tariffs are for India, because it's out in the media that they're talking in terms of a bilateral trade deal. So even if there's a tariff which is a shock on early April, it's quite likely that it followed a trade deal and we have a much more equilibrium state, which actually not necessarily bad for India in a bilateral sense. What we do worry about from a tariffs perspective is not the direct impact, but the indirect impact. If the tariffs in general leads to a global growth slowdown, it will affect Indian markets and Indian economy. So that's a much bigger worry for us rather than just the tariff rate which US imposes on India on 2nd April.
Yeah, absolutely. And I think that clarity will only emerge as the next couple of weeks unfold, right? Because on 2nd of April, we'll get a number like the US president has indicated, a number which will be the basis and the starting point of negotiation. And then we'll see how that goes. So it's not quite over as yet. Gentlemen, great to be speaking with you this morning. Thanks for joining in. Vishal, I wanted to get to you. So the big headline from Gautam has come in that the bottom has been made. Now let's talk some numbers as well. And he alluded to how the actions from the central bank as well as the government, how they've kind of reversed the cycle to an extent. What does that mean for anticipated earnings recovery in FY26 and how our valuations look?
Hi. So I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also our earning estimates are lower than the consensus, mainly because we feel a bit of credit cost is still to come, versus growth expectations also clearly in consensus numbers are slightly more benign. if you look at the earnings downgrade cycle, if the measures taken by the government and RBI starts, showing results in the first half of, next financials, we might see some upside in earnings trajectory. Otherwise, if you look at the construct of P&L for banks especially, you would see that with the repo cut, you will have margin declines, which would put pressure on PPOP. And therefore, if you look at the consensus earnings even today, which are higher than our estimates, they are still in single digits for most players. So that is what I think is in the numbers. In terms of valuations, yes, because the sector has been derating for quite some time. The valuations look reasonable, and we need to see whether FY27 can be a recovery year. I don't think FY26 first half may not be, second half potentially. Yeah.
So Vishal, let's get some of the numbers in. We're going to be ending FY25. I think the guess says is anywhere between 5 to 7%. It's been a bleak year. What do your numbers look like for FY26? Like you're saying, maybe the recovery is more back-ended. And then FY27, at least at the Nifty level, do we get back to double digits earnings growth?
I think that's for Gautam.
So, Gautam, Gautam, why don't you take that?
I'll jump in. I think double-digit earnings growth for Nifty overall and markets overall in FY26, specifically given off a low base in FY25, should be a very reasonable expectation. And we do expect that to happen, including for the next couple of years. And as I said, look, the macro cycle itself, FY25 was a macro tightening cycle. FY26 is a macro easing cycle, both from RBI as well as central government. So that should be enough to have double-digit Nifty earnings growth.
Got that. Vishal, on banks and financials, actually it's been largely pretty tough, right? Accidents in banks, IndusInd is a case in point. MFIs has had a tough few quarters. NBFCs in many cases, it's not really made a lot of money except maybe a few. Gold finances perhaps is an exception. So largely a tough environment. Even though the view has been that it's a defensive space, valuations have been reasonable, and this has been true for the last, I think, almost at least 3-4 quarters now. Do you think money will be made here? And what are your top ideas in this space, Vishal?
Sure. So I think, as I was alluding to, that the earnings downgrade cycle, it's been there for last almost 4 quarters. We could be probably towards the end of earnings downgrade cycle, but I think little too early to preempt because RBI announced a few things, the tax break, all these things generally should be positive. But on the ground, the data we see, it's not showing full recovery. Even if you look at today, the credit growth, loan, the deposit growth numbers are still, 10-11%. Liquidity is extremely tight, probably also because of advance, taxes. But we need to have easy liquidity once again and recovery on the ground. The data we track on delinquencies, overdues, that also says that stress is not over yet. And therefore, I think it's worth watching the space for the time being. In terms of the subsegments we like large private sector banks. We continue to like them. We feel that the sustainable earnings growth of 14-15%.
But my question is, do you like them on an absolute basis, thumping the table and say, well, buy them? Or this is like you make a nice portfolio and you put some banks there. Nothing wrong with it. But is it an absolute call, absolute return call?
See, thumping the table, valuations are not come yet. And therefore, it is a relative call.
Got it. Fair enough.
Even financials, I'm actually, if I could jump in, I'm a little surprised because large banks specifically, Vishal, they've been underperforming throughout the last phase of the bull market. But you still think that thumping the table valuations on large India financials have not yet happened?
See, I think maybe the definitions are different for thumping the table. But let me clarify. let me clarify. So a 15% to 18% return is still doable because they are generating good ROA and ROE. I would say 25-30% is a thumping the table, kind of valuation or upside. So
No, absolutely. Point taken. We've got so much to discuss, so let's move the conversation along. Gautam, another sort of constant feature in this market has been more and more competition in wherever there is profits to be made, right? I mean, profit pools getting disrupted, at least in the future. Cables and wires, for example, right? A news story, 2 hits back-to-back, announcements from large conglomerates making an entry, large business groups making an entry. What's the view there, and what's the feedback that you're picking up? Any outright buys after the sell-off?
Look, any sector where competition increases does cause concern, both stocks as well as incumbents. But there are 2 things to look out for when we look at the framework for these scenarios. One is the level of unorganized sector versus the organized. So if a new player is entering, it's more likely to disrupt the unorganized or also organized in a material way. That's the first framework. And the second framework is the time scale. How easy to disrupt in the next 3 years versus will it take 10 years? Like the role of distribution, the role of understanding the network, everything. Okay. So if you look at cables and wires specifically, we do see some impact. But again, after the correction, the sector overall does look attractive risk reward for us from our analyst perspective. That's the framework we'll put it.
Okay, so that's cables and wires, and you're still keeping the faith despite all the, the worries about competition. Gautam, another space, and I want to get your thoughts overall on PSUs and then defense. And the question really is whether the old leaders can continue to have a place in this leg of the bull market, if you're saying the bottom is in place, and if we are in one. Because I remember you folks came out with a call on HAL, and I think the view on that specific call was that the market's concerns are maybe a bit misplaced and orders will still coming in. So what's the wider view on defense and PSUs?
So before I get into defense and PSU, one simple market level point I would overlay in that discussion is I think 2025, as the market has bottomed and recovers, will be very different versus what we saw last couple of years, where thematics and sector-driven big moves happened. This year will be, even within sectors, a lot of differentiation for stocks. Like you heard from Vishal, financials also is not just one simple basket. There are pockets which will do well, pockets which still are seeing stress and will take time. Same thing applies on PSUs and defense. So we don't have PSU basket as such, but all the relevant PSU sectors. So it won't be a thematic run for PSUs and defense. But within that, and it applies to even CapEx or consumption, we see specific stocks which are attractively valued now on a relative basis versus where they were a year back, or even versus where they were pre-COVID, and where we have strong visibility on catalyst and growth, not just for the next 6-12 months, but for the next 3-5 years. So wherever we have that visibility and comfort, then yes. But the broader sector thematic, that strategy will not work in 25, unlike last 2-3 years.
But you are seeing some of those opportunities in defense. Absolutely. And where else in PSUs? Like defense, some defense names meet your criteria. Where else in PSUs do you still see valuations, growth, etc.?
So more than valuation, growth specifically across, there's opportunities in the utility space, defense, even financials, a little bit here and there, like segments of financials which are catering to particular sectors in the non-bank PSU space. Again, there are opportunities, absolutely.
I think in your published notes, HAL comes up as an idea, right? And I think oil marketing is another pack.
I can't comment on individual names, but yeah, oil marketing in general looks interesting, specifically given where the crude outlook also is.
Yeah, absolutely. I just want to make one point, Gautam, and Vishal said that he's still not seeing when banks are essentially front-facing or economy-facing, right? So it gives you a real good picture of what's happening. And this ties into the earnings growth point that he made. He said, well, credit growth is pretty sluggish, still very sluggish. Maybe it'll pick up as some of the RBI measures start to work their way through the system. Is that the view, Gautam, the team, that it will happen? I mean, it's a H2 story in that sense.
It will happen. And then you look at global economies or Indian economy historically, credit growth doesn't drive or lead a recovery. Credit growth typically follows with a lag. There is activity picks up, and with the activity pickup, there is demand for more credit, and that's how credit picks up, not the other way around. The conditions for the demand and credit pickup has to be there. The condition for demand is the broader economic pickup. And for that to be supported by credit growth, there has to be sufficient liquidity in the system.
Okay, let's talk about a few other spaces. IT services, Gautam. Again, I mean, we all know the news flow and headwinds, etc., which are well advertised. But what's the view now? The team at the UBS and the analysts at UBS. What are some of the ideas where you have comfort and one can make money? Go on.
Yeah, so again, that's a space where the overall macro is quite double-edged, if I use the word. Like there are elements which can surprise positively if the US growth picks up and spending picks up. But given where the valuations, etc., you have to be very, very selective. So we won't go out and say, okay, you overweight IT and go out in a big way, but also not so it's more of a neutralish call on the sector overall. But there are pockets, again, just like most sectors, where we have interesting buy ideas.
Vishal, I just want to circle back to financials for a bit, and we take your cautious approach on board. So really, you said you still like some of the large banks. Beyond that, let's talk about diversified financials. And there's so much going on. Look at the insurance space. There's almost a deal a day over there right now. And there's too much of regulatory change. There's the entire capital market space where prices have come off significantly. So do you see opportunities there? Let's take these two pockets first, insurance and capital markets.
Yeah, see, so on both this, especially capital markets first. Now, we have seen blockbuster years, right? Last 2 years in terms of activity, in terms of all, revenue, EPS. So we are probably, seeing like I don't want to say best is behind, but it's almost like, there was a great momentum for capital markets player. In the very near term, maybe it just consolidates or slows down. We are structurally positive on capital markets, like exchanges and other ancillary, players in capital markets, which we cover. So we think there is a great structural opportunity in this place. It's just that one needs to be sure about the near-term slowdown or consolidation, which we are already seeing, right, in some sense.
That's capital markets. What about insurance? And what do these recent deals imply for overall interest and valuations in that space?
I think that space is also consolidating in terms of growth, right? And therefore, we have seen the consolidation in valuation. We don't have very strong, bull or bear view there on insurance. We feel that, it's a sector which, again, especially the under-penetration of protection will keep driving growth over there. And savings is the bit which keeps, the volumes moving. Yeah.
So let me ask you a more general question on NBFCs. Now, the fact that there is better liquidity, slightly easier norms, risk weights have been lowered, that's good overall for the NBFC space. But if I were to ask you to rank NBFCs in order of preference or priority, where, one can expect better returns, how would you rank it? Let's say there are the housing finance companies, there are auto financiers. You could talk about the gold financiers. Again, they're a big deal coming in, private equity major coming in and thumping the table with some money. So tell us, NBFCs, what to pick and why are you convinced?
Sure. So let me give you the framework, about how we are thinking about NBFCs. First, like microfinance, we feel there are still pressures. Asset quality, headwinds are still there, especially given that few things are still, pending to be effectuated on the ground. Let's say the 3-lender norm. Plus, I'm assuming the situation in Karnataka, is still work in progress in our view. So microfinance currently, I think should be the bottom, in that table. Then I think if you think about consumption lending, which is unsecured lending or NBFCs who are, catering to those, there also we feel that there is still data is still suggesting, build up on the stress, in the sense it's not falling, like it's not improving anymore, not improving. It is staying where it was after increasing in terms of delinquencies. So that's also a segment there, we need to actually watch out for data. Then I think if we think about auto financiers, I think auto financiers is space we like, again, selectively names depending on the valuations. But that is a space where at least you don't have so much problems as a microfinance or unsecured. It's slightly better place, and because they have fixed rate lending, they benefit the most from falling rates. So that is like one of the segment. We don't cover gold finance as of now.
Okay, got that. Just a couple of other sectors, and we'll round up the conversation. Gautam, on telecom, what's the view? We reported yesterday that the government help, which many were hoping for in terms of the AGR dues after the court said no, perhaps won't come. Does your view change, and what's the house view?
We haven't changed any view or our stock preferences. I think the industry looks still attractive overall, though we don't have buys across the sector. We have a mixed bag of recommendations across the sector, including telecom towers and telecom service providers. So it's a mixed view, but overall, the sector still looks attractive to us.
Okay. Gautam, if you can tell us what's the feedback from the global team at UBS, right? Because they'll be tracking all those tariffs, etc., much more closely than we are here. Is it going to be, will 2nd of April be a meaningful jolt to global growth? Because that is the channel through which India will get hurt, as you said, not directly.
So look, not just for India, even global equities is not priced in if it leads to slower global growth. So firstly, the impact of global tariff or these tariffs on global growth and the impact on markets, I think globally is not priced in. That's our house view. Will it lead, what kind of tariffs will it happen on 2nd April is anyone's guess. How long they last and therefore the impact on global growth and recession, again, too early for us to comment. But if there are meaningful tariffs which continue for a prolonged period, it will definitely lead to a growth negative surprise globally. And
but does the team at UBS globally believe that it's an ideological issue? They're ready for some short-term pain. So, are they leaning towards that view? Or is the view that, well, they can't see the market sell off too much, so they'll reverse and they'll go pro-cyclical once again?
Even that is too premature, right? Because there's a second order effect, which is how do different economies and countries respond to those tariffs? So one is it's difficult to predict what US president does on 2nd April, both in terms of degree and quantum. Second is how do different economies and countries respond? Like if there's a big tariff on India on 2nd April, will India wait for the trade deal to be signed and do nothing? Or will India impose tariffs in retaliation immediately and continue the trade deal discussion? Will have very different implications. If that we extrapolate globally, it makes it even more messy than it is.
So to sum it all up, I want to go back to the optimism with which we started, because Gautam told us the bottom has definitely been made for this market. Gautam, so what's the base case view? Nifty either December 25 or 12 months, whichever horizon you're looking at. What's the base case expectation? And leave us with, say, the top 3 bets or the top 3 segments through which you can play this leg of the recovery and the resumption of the bull market, if I can call it that.
So look, firstly, the Nifty should compare to 22,000 levels, not necessarily 23,000 levels. That's where the bottom was made. From that, Nifty should end up this year. Will it be double-digit returns, single-digit returns? Again, too premature. And that's why I used the word tactical in the beginning. Bottom made, bull market is there or not is too early to say that. But sector picks, irrespective of what happens, at least in a relative way, definitely, is private banks, as Vishal highlighted. Consumption names selectively again, because there are enough catalysts around pay commission coming up next year and the tax break we saw this year. And finally, very selective names around the industrial basket.
All right. Gentlemen, thank you very much for joining us here on this special program. And we'll touch base post-April. I think that is when we will really know what comes our way and in terms of whether tariffs are big, they'll sustain for a long time, the roadmap ahead. But it's interesting, nevertheless. The message is clear, not thematic, not narratives, not sectors, but individual stocks within these spaces and sectors which will do well and perform in 25. So you've got to be very selective. Let's slip into a quick commercial break here. We will get you our corporate interactions on the other side. So stay tuned, coming right up.
Welcome back. The beauty of being in a market where bulls are in control. Any dip that has been given has been lapped up and has moved to the high point of trade for the frontline index. But the more interesting move has come by on the IT pack. This morning, the IT index closed, or rather opened lower after having closed higher yesterday. This on account of the news that came in from Accenture. But from those lows, we've seen a big recovery in the IT stocks itself. And by virtue of the weight that they have on the index, look at names like Infosys, TCS, all of them have recovered anywhere between 3 to 4% from the lows and have contributed on the way up to the Nifty itself. Now Nifty, knocking at the doors of 23,300 itself. What this has done, however, is buoyed the sentiments in the broader markets as well. The mid-cap index, which opened about 0.3, 0.4% higher, now has extended its rally to about 1.7%. 600-point uptick is what we've seen, with the advanced decline lines now firmly in favor of advances by a wide margin. As you can see, the gaping distance between the green and the red lines, 2,100 stocks in the green for just about under 400 stocks in the red right now. So looking good for the market. Let's get in our corporate conversation. The first one on the show. We have PS Raja, who's the PS Raja Gopal Sastry, who's the Group CFO at Endurance Technologies, joining in. The stock doing up well about 1.5% higher today. Good morning. The first thing that I want to ask about is the demand situation itself, because one of your bigger clients, Bajaj Auto, over the last couple of months, we've seen some pressure in two-wheeler sales. Has that had an impact on your order book? How does that, augur for you right now? What kind of order inflows are you targeting in the remainder of this year and all of next year, if you could give us a sense?
Good morning. Yes, even if you look at a month as late as February, we did see that the overall two-wheeler market was down by 4%. However, boosted by the exports of customers like Bajaj, who did very well in the export market. While the volumes are challenged, but we do not think that this is a long-term situation. I think it takes very little for the sentiment as far as the two-wheeler market is concerned to bounce back. And even small things as the new tax regime kicks in as per the latest announcements next year. And even when we see all our own expansion plans from a micro side, with all of them kicking in and the order books fast filling up, our new offerings, our high-tech offerings going into the market, I see that our outlook is very positive. And we also think that the market will not stay in the negative area as far as the demand is concerned for long. It won't be as big as the earlier 14%, 15%, but definitely it will be in a positive growth range as we move forward.
What about Europe, international, markets? They account for a fair amount of your sales as well. If you could give us the quantum and what's the outlook out there as well? Because, we've seen some struggles in the overseas market for the world right now.
Okay. There have been a lot of external factors which have been impacting the vehicle production in European and in the European market. And logically speaking, it was a geopolitical situation. It's some part of the demand which actually goes into US, which are impacted by the tariffs, and even the recent regulation by the US on the cyber security. But if you see, even as late as the last quarter, which we announced the results, we grew almost 21% year on year in terms of revenue and 27% in terms of EBITDA. And this is coming from years of preparation, where we have been investing very carefully on our capabilities, on people, on capacities also, which gives us a lot of flexibility and fungibility to cater to any kind of demand which comes our way. And we have been able to look at any car production, whether it is the internal combustion engines or the electric vehicles. We have been able to cater to that demand and thereby actually grow to this level. And going forward also with a good order book, almost 300 million of orders secured in the last 3 years, about 36 million of orders only this year, and the all-important acquisition which we did of a company called Stefferle, which was very well managed, highly profitable, and that's another 80 million of orders. I see that our outlook for in-European business is very strong, which, like you said, is about 25% of our total business. And this will be despite the situation in the market. And if the market unwinds, and we are seeing some good volume growth, and we will stand in the best possible way to gain from it.
One of your other important customers, KTM as well, had said that they are looking for some sort of restructuring and there should be some clarity in the month of March. We're towards the end of March right now. I mean, the last week is next week. Has there been any update here?
The bad news is behind it. So they had asked for a restriction to the court. And as we saw the order from the court, there is a good support from the government to KTM for them to restart their operations. We are already receiving some schedules from them, and we do expect that they will bounce back, and it will go back to business as usual in the next 2 quarters or so.
What about the brakes business? You were looking to start this quarter. So what's the incremental potential revenue that you foresee from here, and has it started?
Brakes for two-wheelers we have been doing for quite some time. Both the foundation brakes and also the anti-lock braking systems, single channel, and we had developed the dual channel anti-lock braking system also. Interestingly, so we have received major orders for the dual channel braking system also in this quarter, which we will be serving going forward. From a two-wheeler business perspective, we have quite a lot of capacities which we had built, and all of them are getting filled up rapidly. And going forward also, we are getting over and above our major customer of Bajaj. We have been getting very good orders from the other customers like HMCL, HMSI, TVS, Yamaha. All of them have been giving orders to us in that braking line. So we see good growth potential there, and with the help of our technical partnerships, we already have in place our ability to turn around new products, new offerings, and applicate them to the OEM's requirements with our own test track is also very good.
What does your order book currently stand at? If you could give us the absolute number.
If you look at year 2000, this financial year, we had about 780 crores of new orders, and 50% of those were for electric vehicles, around 40% were for four-wheelers. And I did mention about our expansion, which is in the Bidkin region of near Chhatrapati, Sambhajinagar, and also the Shendra region. Both the plants are quickly filling up their capacities. And the Shendra especially is for the four-wheeler market with some high specialty processes within the plant, which are required for the contemporary car models, and they would be exporting to some very important customers overseas. And added to that is that we are also very focused on our production capacities being eco-friendly, and this is a completely green building with zero fill to landfill and all the contemporary needs of an eco-friendly building. Now, as I spoke about the order receipts this year, we also have a pipeline of about 3,300 crores of orders received in the last 3-4 years, and majority of them will have their start of production in the upcoming years.
So that leaves us with the final question. What kind of revenue growth margins are you targeting in FY26?
Very strong, but I will not be able to give you a number exactly.
How do you define very strong? Let's put it that way. How do you define very strong? Margins in the third quarter were 12.5%. Do we see mid-teens, double-digit sort of revenue growth in FY26? What kind of profitability improvement that we see? Yeah.
I will have to give you a qualitative answer for that because we do not give quantitative forward-looking statements. Qualitatively, if you see even from the revenue which grew 9% for the domestic business, we had a 17% increase in EBITDA, which was a good, strong margin expansion. So is the case with Europe. Even on a consolidated basis, for a 13% growth in revenue, I think we grew close to 19% in EBITDA. So we are looking at all our investments, both Europe, the Stefferle, and our investments in India, and also the new business acquisitions should give us good revenue growth. And as we see, we are very heavily focused on our operating efficiencies. We do see that we should see good margin expansions also going forward. And that's the way we are drafting our plans, and that's the way we are designing our businesses, while keeping an eye out for any kind of new business opportunities, both organically or inorganically. And as and when we have good maturity of any of those plans, we will make public announcements of this.
That's fairly articulate. Thank you so much for giving us your vision for the next year as well. Wish you good luck for the next financial year. And we will have a conversation as and when you are able to, give us some more details when it comes to numbers and growth opportunities in organic or organic itself. That's Endurance Tech. Let's talk about 1.6%. The other stock on our radar right now is BKG Foods. Manoj Verma, who's the Chief Operating Officer at the company, joins in now. We're tracking the consumption space. We looked at it through the sale of two-wheelers and the suppliers to that. And now we're looking at it through, the sale of ethnic snacks too. The third quarter was marred by extremely high inflation in some of their key raw materials, including the likes of palm oil as well. Has that impacted performance in the fourth quarter? What's the outlook? Thanks a lot, Manoj, for joining in. That's really the first question. The fourth quarter, how has it been so far? Have you seen any moderation in input prices? I remember you said that you've taken price hikes of around 2.5% to 3% in the previous quarter, with a prognosis of about 1 to 1.5% in this quarter as well. All said and done, what does that mean for your margins in the fourth quarter?
So absolutely right. As we said that in quarter three, in end of quarter three is what we took the price increase, and the benefit of that would reflect in quarter four. So certainly you will see drastic movement, upward movement in quarter three to quarter four in terms of the bottom line number, and that is on the basis of the price increase what we took.
So you typically target about 11.5 to 12% ex PLI margins. Will you do that in the fourth quarter? Because the third quarter was just about 8%.
So yeah, so this was including PLI. So including PLI, yes, it will be ahead of that. But what we are seeing is that by end of quarter one is what we would normalize. So we'll come back to last year's quarter two level. So these two quarters, quarter four and quarter one, will get us to that level. So part of the price increase, we have already taken in quarter three. And now a little bit we'll take in quarter one as well. So that's what is the plan.
What about volumes? The last quarter volumes were impacted by obviously a higher base. You had done away with some of the promotions, etc. The package sizes reduced. So the net volumes grew by about 3%. And you had a target of 13 to 15% volume growth for the entire year. Where do you stand on that number? And what kind of volume growth are you expecting in the fourth quarter?
What we said was about 12-13% of volume increase and the balance to the price increase. This is what was the plan. Now, this quarter, you will see, yes, the volume growth would be moving up. I mean, vis-a-vis if we look at the last quarter. So, yes, there will be improvement in this.
By how much?
So, 3 to 4% ahead of what we did last quarter.
Okay, so about 5 to 6% is what we can expect in the fourth quarter. What does that set you up in terms of targets for the next year, FY26? What kind of volume growth, price growth, and margin expansion are you expecting, if at all you are?
Yeah, so certainly yes. So for next year, what we are looking at double-digit volume growth, so somewhere around 11-12% kind of a volume growth, and we expect say 3% kind of a value increase. So that's what should take us around plus minus 15% in terms of value for next year.
And what about margins?
Margins, we will, so by end of quarter one next year, we will come to the normalized margin. So it's of PLI around 13.5% margin. And year on year, the plans are to increase say 50 basis points year on year for next couple of more years.
When we speak to you, we speak through you about the industry as well. There's buzz of that deal taking place in the world of Haldiram's, right? I just wanted your thoughts on what do you make of the valuations, the reported numbers, valuing that company at around $10 billion. What kind of juice is there in a business like that? How much bigger are they compared to you all? And, what is the valuation differential? Because if that deal were to happen, that would change the scope of things for the entire ethnic snack space in the country. What have you heard on it? And what do you make of the numbers that are reported so far?
So we would also know as much as you guys have read and heard about it. Certainly, Haldiram, if you speak about, is multiple times bigger than what we are. But one thing I can say for sure that this stationery category and industry is certainly gaining eyes, and because the kind of growth what this category has witnessed, and because there's still a huge unorganized sector which leaves us with a room of growth in say next 3 to 4 years more. So that perhaps is the reason that the investors are getting attracted on this stuff.
How much bigger, according to you, would Haldiram be versus you? Your, trailing 12-month sales are close to around 2,500 crores. Would they be 3-4 times your size?
Putting both Haldiram as a brand together, certainly they should be around 4 times of what we are.
4 times of what you are. And 4 times of what you are basis what is reported so far, they would be, looking at closer to 8 times sales. Would you think at that level there would be, upside to this space itself?
Hopefully, yes. Let's see how. See, there are two different things. One is that how the valuations are, and second, how the business. So I think within company, what we concentrate more is on driving, the top line, bottom line, the rest of the things and stuff. And valuation is purely an external matter, which perhaps is.
How are they any different from all the others in the space apart from the size? I mean, do they have better efficiencies when it comes to margins? Do they have better growth rates? If you could give us a sense of the difference between them and the others so as to one can make a comparison on your valuations versus theirs as well, along with all the others that are listed.
So two things certainly I can speak on. One, of course, with the size of the company. So the economy of scale comes in. So in terms of margin, definitely, in terms of procurement, other efficiencies would sit in more in a larger organization. That's one. Second is the larger portfolio vis-a-vis most of the other competitors. So these two strong certainly things are. Besides, I assume that quality, though each of the company would be concentrating or focusing on.
All right. Just a final question. With the money that they get, if at all they do you think, competition will increase for you and would make growth difficult for you, or will it continue to remain the way it is?
I don't see that way because this is not for the investment. I mean, this is purely the secondary stuff kind of a thing. So I don't think that would impact anything on the way the business is going in.
Wonderful, Manoj. Thank you so much. Always a pleasure speaking with you. Good luck for all of next year. 15% revenue growth, including 11 to 12% sort of volume growth, along with normalized margins by the second quarter is what you are guiding. 3 to 4% higher than previous quarter volumes for the fourth quarter, along with slump improvement versus what we saw in the third quarter when it comes to margins as well. That's Bikaji Foods stock marginally in the green, though it's still about 30% off its earlier highs. Good time to get in Mitesh Thakkar now for a quick technical check. Mitesh, a dip was given. Bulls lapped that up. The Nifty is up 60 points. What do you make of the markets right now? And any buy ideas?
So, Mangal, you already put it, I think, buy ideas. Yes, the direction remains on the upside. And I think you will get this kind of dips because we have had about 4 days of rally. The Nifty, if you look at it, starting from Monday's low, it's nearly done about 700 plus points. Similarly, the Bank Nifty, from the lows which it made on the 11th of March, it's done roughly about 2,400 points. So I think a pullback can always happen, but the directional bias remains on the upside. So use the stick lines to buy into it. On the stock side, NMDC is something, which is come into my radar. That's a buy with a stop just below levels of 66 for targets of around 71 to begin with. And I'm even looking at 74. So that gives you a good risk-reward equation over here. The other stock is ONGC, which I would recommend buying. The stop at 234.5 for targets of roughly around 248.
All right. Thank you so much for joining in, Mitesh. With that, we'll sip to a short break. On the other side, Manisha Gupta joins in with all the focus on everything that's moving in the commodities arena. Stay tuned.
Okay, welcome back. You've got the market, which is up 60 points, 23,250 is where we are at, and sort of nicely cruising along. And it's good to see that once again, despite a down day on Wall Street, despite this being a Friday, despite the fact that headline risk into the weekend is high, but is higher under the Trump administration, things are, looking pretty good. 5:1 in terms of advance to decline ratio. And, that means that there is a fair bit happening with volumes as well, which we'll refer to in a bit. But commodities, what's the action like? Manisha is here. Manisha, morning.
Morning, Prashant, and thank you for that. And, it almost seems like copper is telling gold, move aside, and it's me making all-time highs right now. That's exactly what we've done. So as the gold prices take a pause after that one-way rally, what is really running into the markets is the copper prices. If you look at the U.S. futures, they are trading at an all-time high of above $11,000 a ton. So while the U.S. has made all-time highs, LME still is waiting its turn. When you look at both of these markets, you could see the difference here. So the U.S. prices have gained up by 28% in this year, while the LME is up 15%. So when you look at both of these prices and the price disparity, it's easy to notice that the U.S. is trading at a premium of 13% over LME at this point in time. There are various reasons for this. Well, one is the U.S. dollar index is trading at a 5-month low. That has been a supportive factor. And apart from that, the U.S. Fed has signaled 0.5% of a rate cut by the end of this year. That in turn also has been supportive for many of these tangible commodities. And then it has been about tariff fears. I mean, that is something that's bothering all asset classes. And when you look at copper therein, well, Goldman Sachs and Citi have put out a report suggesting that they do anticipate that by the end of this year, 25% of import duties on copper could be put out from the U.S. markets there. Well, traders have redirected shipments from UK and Asian markets into US ahead of these potential tariffs. Also, when you look at overall market as a space, US does import 45% of its copper requirements. So that's the exact price reaction that you are seeing to those numbers there. Apart from that, it also is about the US copper itself seeing import of near record highs in the month of March itself. It is believed that 100 to 150,000 tons of copper could be coming into the US markets, and that's an all-time high number in the month itself. And then there's a lot of speculative trade also happening. The traders are covering their shorts. You have money managers deploying money into copper, and short positions also being covered. That has been supportive. Apart from that, there are shortage concerns as well. We do know that mining capacities have continued to decline, and even as there is conversation about increasing ore copper, that would take a few years. So this year and the next, the markets do believe you are going to be looking at higher copper prices continuing there. And then it also is about China, where they have been putting out statements suggesting that they will be buying a lot of tangible commodities. And 3 metals that they have put out a list suggesting is nickel, copper and cobalt. We've seen nickel prices continue to gain up. Copper prices trading at an all-time high. And when you look at the cobalt prices, well, that has surged by 49% in this year. So metals clearly trading in the green right now.
All right. Thank you very much with that update as far as commodities is concerned. Of course, keeping an eye on some of the base metals, copper, as you pointed out. Time for a quick commercial break here. Our special segment, Indianomics. My colleague Latha discusses. She's got 3 economists to talk about whether the rupee is out of the woods. The equity market seems like, fingers crossed, it is. What about the rupee? So Samiran Chakrabarti, Upasana Chachra, and Shantanu Sengupta talk to Latha about it.